Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Valentine's Day. It's February 14th, Tuesday. We got a few things here on the docket here, and we'll start off with the NFIB Small Business Index. This is kind of a gauge to provide us a confidence level of small businesses out there, which is obviously very important because they make up the bulk of the employment numbers out there. So back in December, we had a 105.8 rating and pretty much stayed in that same range in January. So they're kind of feeling about the same. So still confident at 105.9 in the month of January. So this is a good index as to watch where how the level of confidence in these small businesses, and they're feeling pretty good as we can see from this. Now, the PPI, or Producer Price Index, this is a inflationary gauge on the wholesale side of things. So we don't look at heavily, but it does give us some insight as to potentially maybe inflation could be growing in the consumer side. And that's really kind of what we look at, like especially the PCE, which is the Personal Consumption Expenditure, which is the Fed's favorite gauge, and also the CPI. Back in December, they actually was up higher. It was at 0.3 and it was revised lower down to 0.2. So the forecast was supposed to go up about 0.3, and it kind of blew it out the water at 0.6%. Year over year, we're up about 1.6, I believe it was, for Producer Price Index. So this is something, of course, kind of keep an eye on because we want to make sure that inflation doesn't get out of hand here, which will bring us to our next topic here in just a moment here. Currently, stock market's up as we're writing this, but it's been going back and forth a little bit. It's been, at one point they were all negative, and they're kind of creeping up a little bit positive, and they kind of dip back its toes on both sides of the water. And it's really taken this huge cue. Today's cue is really coming from Janet Yellen's testimony before the House, and she touched on some things. Basically, March meeting's coming up. Most investors basically ruled out that she's not going to raise rates. But with this testimony, she's basically saying rates is not off the table, that it could potentially be on the table for the March meeting here. And she's basically giving inclination that rather to get ahead of the curve rather than playing catch-up, it's better to be getting ahead of the curve than playing catch-up. Now, one thing to think about with interest rates, when they do raise rates or lower rates, it takes a good 6 months until the economy absorbs it. You don't really see its effects for another 6 months. So by raising it sooner, we'll feel it later in the year, especially after some of the implementation of some of the stuff that Trump wants to do. As we're kind of seeing the economy picking up, the PPI was up a bit. We're starting to see inflation rise a little bit. We saw job numbers improve. Obviously the unemployment rate is down below 5% right now. So a lot of kind of kicking in there. Now, another thing she also kind of mentioned was maybe doing something with the balance sheet, maybe unloading some of the mortgage-backed securities. And you'll see in a moment that effect on there as well. Now, there's some comments by Fed Slacker. He's out of Richmond. He also kind of indicated that all policies are kind of indicating more rate hikes. So he's kind of adding more fuel to the fire, so to speak, about possible rate hikes. He's a very conservative guy. Janet Yellen is typically a pretty dovish person, but with her coming out saying this, maybe she's having some second thoughts and getting a little bit more hawkish as she's getting into her chairman in her role, basically, with the Fed here. So let's go ahead and take a look here at what the bond market's doing. And after her testimony, we were kind of up here, and we did drop below the 50-day moving average today, even though we did close just slightly above it yesterday. It took up, it dropped. As you can see, we even were below the floor of support here, our first level of support. It was worse. Right now, we're at down 35 basis points, which West Coast, probably not so much a change on the West Coast of pricing. It just came in worse. But from those on the East Coast, we probably got pricing that was based up here and then dropped, so they got a pricing for the worse. So this happened pretty quickly here in the morning for us on the West Coast here. Kind of hit us pretty quickly. So this is a pretty big sell-off right here. We could potentially see some more touch-offs as we saw like here. Now we're underneath the 50-day moving average. Unless they start shrugging that up, it's debatable. But typically when there's a rate hike, that helps bonds. But in this scenario, we're starting to see people getting kind of spooked, the investors getting kind of spooked, and they're doing a big sell-off right here. So obviously higher interest rates in this case. All right, folks. So that kind of concludes our video today. But if you guys want to get updates throughout the day, I do go on to Twitter and I do post underneath my Twitter account, Mike Bjork. You can get the updates throughout the day on there, and we'll hopefully see you guys tomorrow. I hope you guys have a great day, and happy Valentine's to all you guys. I hope you guys have a wonderful Valentine's Day. Thanks for watching. We'll see you guys tomorrow. Bye-bye.